Let's turn back to what we just heard out of Sintra. Kevin Warsh, of course, and bring in Columbia University economics professor, former Federal Reserve Governor Frederic Mishkin. Talk about what we learned. Frederic, good to have you. Thanks for the help today. We listed a few headlines that we got on the mechanics of the Fed, but also sort of how he's thinking about broader issues like AI. What did you hear?
Hey, well, first of all, I think very importantly is he reaffirmed the issue of the independence of the Fed and the importance of the Lisa Cook decision. And also consistent with his press conference, he's very much emphasized that the Fed's job is to promote price stability. And I think all of this is really good news, that we've dodged a bullet, that I think that Kevin is going to be very focused on inflation as part of his remit. And that actually protects us a lot from Donald Trump's push to always lower interest rates. So I think that's very important. I think another important issue is the whole issue of forward guidance, which of course is a big part of the joking around at this session. I think the issue, and it came up actually by discussion by other people. I think Kevin has talked about shrinking the balance sheet. But I think that what's key is the way that monetary policy and setting of interest rate is conducted. He did emphasize very much that the Fed's job is to control interest rates, and in order to actually achieve its remit of its dual mandate of both focusing on inflation, but also keeping the economy stable. So in doing that, however, there's an issue about whether you have enough reserves in the system to allow you to do it under the current regime and the way the Fed is conducting monetary policy. So I think this is going to be part of his challenge. He talks about shrinking the balance sheet, but it may not be able to shrink that much. Remember, at one point, the Fed shrank the balance sheet, and all of a sudden they lost control of interest rates. And so what do? They actually resupplied reserves into the banking system and actually stopped shrinking the balance sheet by as much. So I think that's one of the key issues he's going to have to face. On the other hand, very interestingly, another member of the panel said that the real issue is that the central bank should not be involved in taking a lot of interest rate risk. And I think that under normal circumstances, that's absolutely right. And I think that could be an issue of what the task force actually focuses on. So I think that's also very important in terms of thinking about how he'll proceed in terms of thinking about these
issues. He did say that working to suppress volatility is a good move in a crisis, not necessarily so in a time like this. How much volatility do you think he's willing to have the market endure?
Well, I think that this relates to his issue about forward guidance. Again, there's a subtlety here that the old-style forward guidance that the Fed has been pursuing is very problematic. And in fact, this is something that I did research on as part of the U.S. Monetary Policy Forum, which I co-direct, where we talked about the limitations and problems with the way the Fed has actually conducted forward guidance. And I'm very sympathetic to that. However, again, what was emphasized by another panel member was the issue is that the central banks need to provide information to the markets about the reaction function, how they're going to react to incoming data. That's extremely important because it allows the market to actually do some of the heavy lifting for the Fed. If the market knows that if there's very expansionary data coming in, that the Fed will tighten rates, they'll actually tighten long-term rates immediately, even before the FOMC meeting, and that's a big plus. And in fact, the Fed should try to not create a lot of volatility. And it's important to actually tell people what you're going to do if things occur in a particular way. So I think that some people would call that another kind of forward guidance. I would actually call that forward guidance of a different sort. I hope that's where he heads. To actually eliminate any information about what the Fed is going to do in the future would be terrible. And the reason I think it'd be terrible is it would increase a lot of volatility, even in normal times. And that's not what he says he wants. So again, I'm hoping the task force focuses on the real issue here, which is how does the Fed inform the markets so there's less volatility, but on the other hand, not necessarily do unconditional forward guidance of the way it did in the past, which it should almost never do except in extreme emergency situations.